Thank you, everyone, for joining us this afternoon. We have a long-awaited update from iFabric. Glad to have them back on the channel and back as a client, doing some marketing and getting out what's a really exciting story right now. So lots of updates since we last had a webinar with them. So looking forward to that. With me today, I have Hylton Karon, CEO, Giancarlo Beevis, COO, and Hilton Price, CFO. And as always, this presentation will contain forward-looking statements. You can find those on the company's presentation on their website. And there will be Q&A, so feel free to input any questions you have in the Q&A box. And with that out of the way, I'll turn the mic over to Hilton, who is going to give us a bit of an update. Nice to see you, Hilton.
Nice to see you, Deborah. Thank you for organizing this, and thank you, everyone, for taking the time to communicate with us. 2023 was another step forward for the corporation as a group. I think that we've now reached a new level of revenue, and needless to say, 2024 looks to exceed that, and 2025 and beyond should exceed that. So I think that we've delivered our growth that we've intimated in the past, that this company continues to grow. I think that we've had not only generic growth, but I think that 2024 and the future is going to show the kind of growth into the US market that we've spent quite a good bit of 2021 and 22 teeing up, and onboarding major new accounts in the US. Not only adds to the health of our company by bringing on new customers, but our risk profile in terms of being in bed with any one retailer is certainly mitigated, and probably a good strategy for us as we go forward. With that said, I think that 2023 delivered a very healthy 5 quarters. I just want to remind everybody you are looking at 5 quarters. We changed our financial year end to the end of December. And so when we're talking from now on a financial year, it's Jan 1 to December 31st, which also means that our quarters are also the calendar quarter is the same as our financial quarter. It's going to make it a lot easier for us to communicate with the investor community. Having said that, I think we brought out the books and we showed what 2023 delivered, which division, what each division delivered. And I think that the one area, and I will hand over to our CFO to give a little bit more color on it, the one big item on the financials was our situation in China, and the corporate decision to impair that cost on the books. We did it with a lot of thought in mind as to what it does to our current situation and what it does to the future. I would like to just make one comment. This is by no means us throwing in the towel and believing that we are not going to do everything to recover a substantial portion of that revenue. This is an accounting book entry. While it does have a severe impact on the results of the company, by no means is it a lost cause in our mind, and we continue to be very actually encouraged with what we hear from China, from our council, as to what we still have in store in terms of being able to do recoveries, and we will update the market as we continue to do that. I think without further ado, I'll just turn over to our CFO to go over the broad stroke big numbers of what we did in 23. We do have Giancarlo Beevis, our CEO, on the call. He has to leave at 2:30. So if anybody's got any forward-looking questions in terms of where we are with our customer profile and what 24 and 25 are going to bring, we have everybody of management, senior management on the call, and we'll be happy to entertain questions when we get to Q&A. So with that said, I will hand over to our CFO, Hilton Price.
Good afternoon, everyone. Thank you, Hilton. So as Hilton mentioned, we had a change of year, and so you have to bear in mind that when I discuss the numbers, they may not be directly comparable period on period, as 23 was 15 months compared to 22 being 12 months. So that being said, in the interest of being brief, I'll try and focus on what I believe are the most important or salient areas of the financial statements that bear discussion. So the first item is revenues. For 2023, that's the 15 months, our revenues are 28.4 million, and that compares to 19.7 million for the 12 months in 2022, which represented an increase of around 15% on a proportionate basis. In terms of revenue by division, which I think is more important, Intelligent Fabrics reflected 20 million in revenues in 23 compared to 12.5 million in 22, and that's a proportionate increase of around 25%. Intimate Apparel in 23, revenue about 8.5 million compared to 7 million in 2022, which means that the revenues for that division were basically flat. Gross margin. In 23, we achieved a margin of 39% compared to 36 in 22. So our range of margin is in the range of 35 to 40%. That's where we're comfortable and happy at. And in terms of margins, they really are mix dependent because not all our products carry the same gross margin. So if we have a high proportion in any period of lower margin product, we will see a drop in gross margins. That's expected and can be measured. As Hilton mentioned, the results did include an impairment provision of 3.8 million for the deposit that we had outstanding in China. So that's 3.8 million before tax. The after-tax effect of that was 2.8 million. So obviously you can measure it after tax. Now, in terms of that contract, we did complete the contract. We made around 2.5 million from our customer on that contract. So in terms of our overall exposure, it's not as bad as one might think by looking at our financial statements. We did claw back quite a lot of the potential loss by way of the profit on completing the contract with our customer. So going forward, having made the provision, in any period that we make a recovery of anything against that deposit, we'll reflect that as income, and obviously it'll improve whichever quarter that income is reflected. In terms of EBITDA for the period or the 15 months, we showed around 1.2 million compared to 500,000 in the prior period or the 12 months in 2022. I think operationally, that's all I really have to say. Turning to our balance sheet, well, our balance sheet remains strong. Our working capital ratio is around 4.6 to 1, which I think in terms of most companies would be considered a very strong ratio. And what I'd like to mention in addition to that is we have a valuable property in Markham, which shows on our balance sheet at around 2.5 million. Is in fact worth many times that amount. Unfortunately, you can't go and revalue and show the correct value on your balance sheet. But I think if Hilton can correct me if I'm wrong, we recently turned down an offer of around 12 million for the property. So that equity is there, but it doesn't reflect on our balance sheet, but it's equity nevertheless. And obviously, it's something that we can use to leverage up financing in the future if that's required. In addition, we've got a bank credit line of 6.75 million. That wasn't being utilized at the end of 2023, and currently it's still not utilized. So that credit line, to the full extent, is available to finance new business, which Hilton and Giancarlo will talk to in due course. And I think from a balance sheet perspective, that's all I think I need to say. It is a strong balance sheet. We don't have much debt, and we're very proud of that. Turning to quarter five, in quarter five we had revenues of 6.8 million compared to 4.9 million in 2022, and these are the same quarters, which would be the quarter ended December of 2023 compared to the quarter ended December 2022. So that's 6.8 from 4.9 is a 37% increase in revenues in that quarter. By division, well, Intelligent Fabrics accounted for all of that increase, recorded revenues of 5.8 million compared to 3.1 million in 2022, which was around 89% increase, not bad. Adjusted EBITDA for the quarter was 257K compared to 190K in 2022. And the reason for that, to a large extent, was our selling and admin expenses did reflect quite a big increase, around 27%. As we've been spending ahead of the curve, so to speak, for the purposes of building the business and securing new customers. Margins in the quarter were 38% from 40% in 2022, and that's well within the range that I mentioned earlier. And again, margins are mixed related. And I think that concludes all I have to say about our statement. I'm happy to take any questions.
I do have a couple questions for you, Hilton.
Go ahead.
So could you outline your growth expectations for Intelligent Fabrics chemical business versus the apparel business, and also break out the revenue mix? Maybe that's a combo question for a couple of you.
I know it's a common question, but for strategic and competition-related issues, we don't break that out. It's part of the Intelligent Fabrics revenue stream. We've never discussed those amounts individually, and we're up against some very big players in the chemical field. Strategically, we wouldn't like that number to be out there.
Okay, makes sense to me. And then another audience question, can you deliver volume into the major retailers in the US without further warehouse expansion?
Giancarlo can speak more to that. I believe so. Our warehouse in the US is a large warehouse. I don't believe they're filled up to any full extent. I think they've got quite a large capacity available, and they've got associated warehouses that we could use. So that's really not a concern.
I'm going to nip that in the bud in both places. I would say in Canada, while we own our own building, we have more than sufficient third-party facilities for those few anomaly months where we do need additional facilities, and we do use it and have and continue to do it. So warehousing as a capacity is not an issue in Canada, and it's certainly not an issue in the US. We've got a very big, well-organized operation who can handle way more than we can bring their way. I think warehouse capacity and supply capacity are just two issues that really don't even have to be addressed. We've got a very mature supply and warehousing facility, and those are just not challenges that we even think about on a daily basis running either division. Giancarlo, anything you want to jump in?
No, I was just going to say the same thing. The facility in Houston where we service the United States market is more than large enough. It's a great, well-run facility by our partner down there, expandable if we need it. And then the same goes for here in Canada, our building. We've already done expansion, as we announced last year, and moved our offices into a separate building. And our owned building is now complete warehouse, which not only gives us the expansion of our warehousing capability, but also increases the value of that building, because in our area currently, warehouse is outpacing office space. So it had a double win for us on that. And then we do have another partner in Canada and the US that if we ever need any short-term overflow storage space, we do have that at a reasonable cost. So
maybe, Giancarlo, you could provide a bit of an operational update on what's getting you excited lately.
Yeah, I think there's a whole host of things that are getting us excited lately. I mean, from the apparel standpoint, as we noted in our most recent releases, we've expanded into 2 major national retailers in the United States, which when we compare that to the scale of those same national retailers that are in Canada are 4 or 10 times the size. So that is very exciting for us. We've taken the success that we've delivered in Canada and grown that into their United States counterparts. So that's a fantastic boom for us for 2024. And then also we've had a whole host of new developments in different product ranges that are being very well received, both Canada and the United States. Our swim division has grown exponentially since they're taking on of the Root Swimwear license. We're looking at extensions in all of those different licenses that we do and potentially taking on new licenses to expand that business. And then from the chemical side of the business, it's growth. We continue to push. We continue to sign up new fantastic brands every single day. Our relationship with the Lululemons and the Under Armours of the world and the North Face of the world are as strong as ever. And then we are working on a whole host of new development for them in multiple categories, some chemicals that we have done in the past and some new developments that the market hasn't seen yet. So very exciting times for us.
Can you provide an update on when some of the major American retailers now on board will be able to be disclosed?
Yeah, I think that the one that we are already shipping and product is on shelves is Target in the United States. We shipped that, I believe, in March, and that is on shelves. If it's not on now, it will be in the coming weeks as it gets delivered. And then Walmart USA, we did a test last year. The test was successful, and all of those, or a handful of those programs, will be on the shelves in the coming months, with additional programs delivering towards the end of the year.
And have any key customers you previously had stop their programs?
No, we haven't had anyone cancel anything. We've only had growth.
And then can you provide an update on the hospital clinical trial?
Yeah, so the hospital clinical trial we've submitted our submission to, you'll have to forgive me, I don't recall the name of the journal, but a very reputable and powerful journal in the infection control area. It is scheduled for their publication as they can fit it in. Right now, we're being told that should be published on in their journal somewhere in between July and August.
And then I think that's it for the operational questions. I had another question for you, Hilton Price, from the audience. You mentioned a $12 million offer. What value per share was that, if you're able to disclose?
What value per share? I mean, translating the offer for the building into, well, I think if you add that building to our book value of our other assets, we're currently trading at around book value on the market. So it's not a difficult calculation. That would comprise about a third of that. So I would say 50 cents, 60 cents, 50 cents.
All right. I don't see any other audience questions. Was there anything that you wanted to talk about, Hilton or Giancarlo or Hilton, that we haven't covered today?
I just think that everybody has to appreciate from a balance sheet perspective, we're really well poised for the future. Our order book has never been bigger on a pro rata basis than what we have today. Our model of business, our customers place orders 6 to 8 months in advance, so we are well poised to understand when we bring out projections what turnover we're going to be doing for pretty much the rest of the year and into 2025. So that this is getting into being a mature business. I think just to the question in last point that I will bring, the question that was posed to us is how much of our business is chemical and how much of it is apparel. The best way to answer it and for people to really appreciate the importance of technology for our entire business is that besides the IP that we hold in certain key lingerie styles, everything we do with IFTNA, for the most part, carries a minimum of one technology, if not more. So IFTNA is very technology dependent in terms of how we get our apparel business. Our apparel sales are our chemical sales, because without these proprietary and unique applications, we wouldn't have the success and the growth and the excitement. And that really is the word that we're getting from our customers. And all we're getting is, please come back and talk to more divisions to explain to them what you can bring to the table. So I think that it is really worth noting that technology is still a cornerstone of what our business is and into the future. And I think that is key to our growth is what we're working on in terms of next generation technology for apparel, be it retail or medical. So these are things that are endemic to what we are as a company and are key to the growth of this company into the future.
Got it.
In addition, Hilton, I think you should speak briefly that whilst we're building these relationships with major retailers and all these new programs, that we continue to take regulatory very seriously, and we've got high expectations for complete success.
Absolutely. And I think there's development work going on all the time. Whether it is a technology that we've developed that we need new generations, we're also cognizant of regulatory changes within Europe and North America. So we're always looking to make sure that whatever we've had in the past stays relevant, and where changes are needed, we are working on that and making sure that efficacy and application remains pertinent to our customer base. We are working actually on new developments, which do take time, but there's certainly quite a host of R&D taking place in the background. When we're growing from 19, as Hilton said, from 19 million to 28 million, that doesn't happen overnight. We have got things, when we're talking about our next projection into the 30s and into the 25s, who knows where it's going to be, high 30s, low 40s. This is because of the work that's being done now. So there's a lot of behind the scenes activity taking place to continue a very impressive growth technology. The reason why we are, even though we're not into our bank line, but still applying for bigger lines, and our bank are looking to grow our facilities, is because the kind of growth that we've got that we're looking forward to at the end of 24 into 25, it's still substantial. And I think, Hilton, to the point of explaining to the market, yes, as Giancarlo alluded, our clinical trial is complete. Our clinical data has been publicly announced that we had very successful results of the actual trial. What we're just waiting now is for the journal, what's called a peer review, and a white paper, which is basically the medical review of the results that we know are very impressive per the laboratory's words, not per our words. And EPA, while people have heard it from us in the past, we have got one final leaching study, which has also been announced, and that is well underway. And expectation is to have it completed this year. I'm not going to give a date. I'm not going to give a month, but we are on it. And we believe this is the last hurdle to put it to bed. And final point on that, I think I have to remind people that EPA did give us a registration on that protocol for non-apparel. So we already have a partial registration. The only thing is that the leaching study is required by them as a last step in order to give us the registration for apparel. So these are very positive, and yes, it has taken a long time, but we still believe we are on our way to being the world's first EPA-registered pathogen-specific kill claim for apparel. So we're head down, and we're continuing to push that effort, and we believe we will bring that to a successful conclusion.
How many peer reviews are you expecting, Hilton?
At this point in time, just one. So we are going to, we can put it out to additional journals at a future point in time if needed, but we've put it out to a journal. We did our homework before we just chose which medical journal we wanted. We wanted to make sense. I think one has to keep in mind that this is done in conjunction with a serious customer of ours in California who are anxiously awaiting this white paper for how it is going to impact their business, which in turn is a feathering cap for what business we're going to be able to enjoy with their new level of ability and entrenchment into the marketplace once this thing is brought to conclusion.
And just quickly on that, from the peer review perspective, the hospital system that we did the clinical trial with, it's a major hospital system in the United States. They were so impressed and enthralled with the results of the trial that they also may be looking to publish the results in journals of their choosing as well, that are more pertinent to to the learning and the education around the hospital system, whereas ours is an infection control journal. That is where we look to see the driving of the sales using the clinical trial data. So it won't be just ours is one with our scrub customer, but the hospital is looking at a handful of other ones that they will likely submit to.
Okay. And at a high level, who would you identify as a direct competitor?
Sorry, guys. I'm just going to say thank you to everyone for joining. I have to pop off. We appreciate your continued interest and support. And if there's any other questions outside of this, feel free to reach out. You're in good hands. Thanks a lot.
Thanks, Giancarlo.
Thanks, Giancarlo. It's an interesting question, Deborah. We're a unique company in that there's very few apparel companies that really spend the time, research, and development in technologies. So there are a lot of chemical companies, the Dow Cornings of the world, that dabble in everything, and they're certainly not going to manufacture any finished product for what their chemicals are applied to. So we are a unique company in the sense that, as I said earlier, technology is what drives our apparel manufacturing. I think that in the future, we're a company called Intelligent Fabric Technologies. I think the future, if one has to look long term, we are going to be called Intelligent Technologies. We are looking to expand past just apparel. We are going to look at other surfaces, other materials that we are looking to apply unique applications that don't exist right now. These efforts are underway. It takes time, but we're spending the time and the efforts to grow this business beyond just apparel. These are really big markets that we're going after. So the long-term growth of where we're going and the opportunities that we're bringing to this business are in multiple fields. And I just think that these are all very well worth spending the money, because when we get it right, we are trying to pioneer areas where there is actually nothing in the marketplace right now. We're not trying to be a follower. We're not trying to just be a commodity business. We're looking for unique opportunities that are value added for this business.
Can you walk us through what earnings margin will look like as revenue ramps?
Well, I just think that, our bottom line, we've done a lot of heavy spending in the past. We've done a lot of the EPA, a lot of the clinical trials. These are not cheap endeavors. And we've spent a lot of money getting to where we are today. Is R&D always going to be a cost of this business? There is no question. But I would just say, and I can't give a specific number, but I think, as just to put it lightly, the heavy lifting from a financial cost, we've absorbed a lot of the heavy lifting. So I think that now it's going to just be a smaller proportion of all our budgets and all of our expenses. R&D will always be an expense of the kind of business we are. But I think that to get us into the future, it's a number that will go down. And therefore, as we grow, our disproportionate overhead to sales means that, as Hilton said, we went from a 36 GP to a 39 GP. I'm looking forward to get us into the 40s and continue to get a better GP and a better bottom line for this company. And there's no reason why we won't achieve better financials going forward.
Yeah, I agree. I see the expense curve flattening out going forward. It's starting to look that way already, so that more and more will drop to the bottom line proportionately. Any incremental revenue will create a much bigger bottom line now that we're at a base where our overheads are paid by the base revenues that we've established over the last 3 or 4 years.
And one last question for you, Hilton. It's an easier one. So a couple comments, just that there hasn't been a lot of updates lately. And are you planning on doing a bit more marketing in the future and committing to keeping your shareholders updated?
I think Deborah is the one who's best to answer that. She's filled my calendar. So yes, I think the fact that Deborah is in front of everybody, she's had me busy the last few days and has continued to fill my calendar. So yes, I mean, we're going to make a far more concerted, immediate effort to not only communicate with people that are on board now, but to expand into the US and other markets with the visual optics and bring our story to a far bigger audience. So that's underway since the beginning of April, and we continue to fill the calendar with a lot more. And there's announcements to come in the not too distant future. So please look out for that as well.
Yeah, I would add that I think, Deborah, in the last little while, the last 12 to 18 months, there hasn't been a great appetite for small caps. I see that changing. There is some indication now that is changing. And obviously now that with that momentum, that would be a perfect time for us to get on board and start really getting our name out there now that the appetite to acquire companies like that seems a lot more vigorous.
I agree. There's been a lot of action in small cap Canadian stocks, so it's a good time to be out marketing, and you've got a great story to tell, so makes my job pretty easy. I've got one last question here from the audience, going back to the write-down. So regarding the write-down of 3.8 million, blah, 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 in the last quarter, are there any other one-time costs or write-downs that you're aware of that could potentially affect the financials in the future?
No, I'm not aware of any. Just operational stuff. From time to time, we might have to write down the odd bit of inventory. That's inevitable. You can't foresee what that might be. But in terms of any major things hanging over our head, not at this point.
Great. Well, I think it's really exciting times for iFabric. I love that you've restructured to a calendar year end. I think that really starts to get you ready to be an institutional name. It makes it a lot easier for dummies like me to figure out the financials and to compare you year over year with some comps. So I think that's a great strategy. And I think, the work that we're going to do in the coming months, Hilton, I think it'll reflect well in share price appreciation. Thank you for taking the time. Thank you everyone for participating. If anyone has additional questions or would like a one-on-one meeting, feel free to reach out. I'm sure you all know how to find me. And yeah, have a great afternoon, everyone.
Thank you.
Thanks, Deborah.
Thank
Appreciate it.
you.